What's going on, guys? Philip at Trade Genius. All right, we got a lot to cover this week, so we'll get right into what's going to be discussed in this video. We're back to a Bart market, so I'm going to talk about that price action. We're going to talk about the quarterly chart because the current price action is going to look similar to what we've seen in the past, and I think that's pretty telling. We'll check in on the weekly chart levels, discuss the parabolic structure that we were in, check up on our Fib Multiplier levels, look at market internals, discuss the crypto fear and greed index, talk about our Tether charts, look at the Bitcoin futures gap, take a look at the 4-hour chart, this trend line, and our Chinese Yuan comparison. Take a look at the gold comparison chart. We'll revisit the halving chart and take a look at price action relative to what's happened in the past. I will also take a look at price action as we've just finished up another monthly contract expiration on the CME futures and see what that's telling us. All right, guys, let's dive into this video.
Trade Genius.
All right, guys, so let's talk about the Bart market. So essentially what happens is as liquidity comes out of the market, and that's what we've been seeing in the last week, what you'll get is these moves that go up fast will compress and get in a very tight range, chop, and then come back down. So they kind of look like the top of Bart's head from The Simpsons. And that's what we call a Bart. And so you'll see it both in up and down. So in other words, it goes down, chops sideways, and then comes back up. And then you have like an upside down Bart head. Here's another formation like that. And so you just have to realize when this condition happens, it can be very difficult to do your shorter time frame trades. So we've actually switched to when it was very liquid, we were on a 5-minute chart. So as you can see, the moves were a little more liquid back here, a little more fluidity in them. If you had to move down, there were some gyrations, but not this move and then just really tight sideways action. So this is your first indication that liquidity is drying up. So it just makes it tougher to do the smaller time frame stuff. I think the smallest time frame I would look at right now is a 4-hour chart as far as dips and pops. And so basically at this point here, we're just going to have to stick with this time frame until we see an uptick in volume. As you can see, the average volume average is dropping. So I think it's an indication that we might have seen the top for this current move and start moving into more of a consolidation type phase for Bitcoin. But we'll get into that more in this video. All right, let's take a look at the quarterly chart. All right, guys, so here's the quarterly chart. We're going to use the Brave New Coin Liquid Index for it. But notice here how the chart moves up on these tops, these market tops. So we get a big quarterly candle followed by a fairly good size red quarterly candle. Okay, that marks the top. So we saw it back in April to July 2011, saw it at the top in 2014, end of 2014, or end of 2013 into 2014, and the top end of 2017 into 2018. So they're all very similar. And if you take those quarterly closes and you watch what happens when the markets recover, they come right up and they test those quarterly closes first and then get into some resistance there. So that happened here in this market back in the end of 2013, 2014 market. Same thing. These quarterly levels were tested, resisted, and then finally broken through, and the resumption of the bull market. So what we're seeing is very similar to what we saw on the last cycle. We're seeing it here. So we can expect a quarter of possibly some consolidation here and chop, and then gear up for this breaking through this 13,899, 14,000 area. So just keep that in mind. This is our current quarterly candle. So it's going to go from July to September. So expect some consolidation, I think, at this point. Which is in line with what we've seen historically. Okay, so just good to keep that in mind. All right, let's jump over to the weekly chart. All right, guys, flipping over to the weekly chart. And basically, on the weekly, as far as the moving averages go, nothing to be alarmed about. We haven't even touched the faster moving average yet, which is currently at around 9,000. And, this is, again, coming out of a bear market. If we go back and we look at the last times that's come out, we've come out of a bear market, you'll notice that popping above that faster moving average usually gets a pullback, which we're seeing now. But price typically, once we get started out of these bear markets, typically hugs that line and doesn't really test that lower weekly moving average until later. So don't be surprised if, like, again, we're seeing things that are pointing to more consolidation now. and we kind of see this kind of hover around this level and consolidating before making another move higher. Again, we're talking in a more weekly time frame, quarterly time frame, but as far as these levels go, I don't see anything to be quite alarmed about. Very bullish move out of the bear market. Of course, this pullback is what I would consider healthy. This level here probably is going to buoy price for a bit. As far as fib levels go, this actually current down fib range has a fib target of 8,095. I think if we get a gap fill on the futures chart, which we'll talk about a little bit later, I think it actually goes through there because of just the amount of people that are looking at that level. We'll talk about that in a little bit more as we get to the gap chart, but if we did fill that gap, then I think we wouldn't bounce at the gap. We'd actually go and attack this target of 8,095, but we'll talk about that in a bit. All right, let's take a look at the parabolic chart. Okay, so the parabolic chart, ideally what we would have seen is this arch kind of hold and base 4 kind of consolidate here, and this thing shot up and finished off this parabolic move, but that didn't happen. We actually got the Libra move, which was the start of this into the next out of base 3 and into base 4, which then retraced and then bounced. At that point, it looked like there's a possibility that we'd see some consolidation there and then move higher. But really, this just strung out. This base is now 34 days long. And really what you want to see are these bases shrinking in length, not growing. So this again, I think this parabolic structure story is probably played out. And now things are pointing to more of a consolidation type phase for Bitcoin. Again, healthy, coming out of such a big move up, which will compare to other previous bear market moves out here in a bit. But I think we're now talking about consolidation. So I think this parabolic chart has run its course. All right, let's take a look at the Fib Multiplier. Fib Multiplier, we've came up through the Fib 2 level, pulled back. Now we're at the Fib 1.6 level, and that's holding. And again, kind of like the weekly moving average, this has the higher probability of holding price, more or less being a buoy for price for this price level in an area of consolidation. If we were to break down significantly, then and take out some of these, because right now we're sitting on kind of like support and resistance in this area, then the lowest I'd see price going, it would be this lower fib level, which is the 1.236 level, and currently that's sitting at about $7,400, and I think that would be ultimate low if it were to do that. But honestly, I think we consolidate up in these levels higher. All right, let's take a look at market internals. All right, guys, so this is our internals. Basically, what we're looking at here are exposed longs, exposed shorts, and then the funding rate on BitMEX, which dictates to us if the trade is crowded on one side or the other. So if we have a negative funding rate like we have right here, that means there's more shorts exposed in the market. If it flips long, then that means that there's more bulls. Now, typically, because these guys are more savvy on this platform, BitMEX futures trading, typically this kind of shows you where the smart traders are positioning. Now, when it's flat like this, you can expect chop, and that's what we're starting to finally see. The range is going to be currently from about 9,300 to about 9,600. Okay, so that's the chop range that we're currently in. Again, from this short drop off, we saw price collapse down, and now the shorts have stabilized. In fact, we've been growing a little bit, and the long exposure has been fairly steady as well. So internals looks like we're heading for more chop unless we see a drastic change in the BitMEX funding rates. But right now, it's just looking like we're heading into a lot of consolidation at this point. One thing to note on this lower chart, and I've marked off these levels, is that the bears are definitely in control. If you notice here, we made it high. We come back, we test that level, actually tap some liquidity, meaning that we made a higher high, but we couldn't close above it, and then it collapses back down. So you'll see that whenever you come up, you make a high, these markets love to retest those levels. They know that the shorts are hiding the stops above, and so they'll go up and they'll tag that liquidity, which actually means larger fish are actually filling size. They get those stops hit, fill their size, and then resume the overall trend down. Same thing down here. You'll see it comes down. We make a high here. comes up and retests it actually a couple of times, but this is key. And I think this move here back on July 26th, where we got over 10,200, we couldn't really get a 4-hour close above these highs, and then that was the last hurrah for the bulls, in my opinion, for this move. That one would have saved the day and opened the way for another move back up to 11,000, but there's just not enough buying power to overcome the sell pressure, and so we collapsed lower. So we'd be looking for another series of where, another likely drop down, and then it comes back up, retests these highs, and then falls back, and then possibly see the end of this lower high, lower low type move into consolidation. Okay, crypto fear and greed. We have a reading of 22. Let's scroll down, look at the chart. All right, so the chart, again, we're getting low readings historically. When we get down into these levels, that's the area where you'd want to swing and hit one long. But, again, with the lack of liquidity and just real tight, choppy market right now, I don't think you're going to see much of a swing out from these levels. So we might be getting into one of these situations here where it's going to chop around in this low part of the range and then finally make a move out. So if you've got patience, you could position in this area looking for a move back up, similar to what we saw here. But I don't think we're going to see the immediate, just because of the lack of volatility now that we have, that we see a big move out of this. So as far as a swing trade goes, yes, these readings are typically where you can see some kind of bounce from, but patience if you're going to try to swing from these levels. All right, let's take a look at the Tether cap. All right, this is a Tether cap markup. Basically, Tether will consolidate, and then we get a catch-up move, and then consolidate, and then a catch-up move. We're consolidating, and so here's kind of like, are we going to see another big thrust up? And I just, even back here with these moves, the volatility was a bit better. We've just gone back to the way it was, back in when we were coming out of that bear market, just very low volume, low liquidity. So I'm not sure we see that here. We're going to have to really break over 10,300, I think, to wake up this market. And then possibly we could talk about seeing a move higher and follow kind of what Tether has been leading during this move up. Would also be the third larger push up in this move. So interesting that Tether's in this formation shaping up, but everything else just saying that there's just no volume right now and it's just going to be chop city. So this is the only really bullish outlook, would be the Tether charts. So I've marked this up for visual aids, but the actual current situation of the chart is here. This is a live chart. This lower thin line, guys, I'm probably going to keep on. And what it is, this is actually the stablecoin index. So this is not only Tether, but it's also USDC, TUSD, all that stuff. And I think that's probably a better representation, because not necessarily all the money going to work in the market is going to be used via Tether. You see a lot of USDC being minted. So I think we'll probably end up switching over to this smaller line, representative of the fiat money going to work via the stable coins in the crypto markets. All right, let's take a look at the CME gap. Okay, CME gap, again, we're still waiting for a fill at 85.15. Now, everybody and their mom is waiting for this 85.15 level. So I think the way the markets are, I think there's two outcomes. We don't quite fill it. We get down to about 8,800 or so and we bounce, or we do fill it and we break and we probably test lower and probably probe these lows here and see like maybe a dip down to 7,400 initially. So it's still there. But I think those are the two most likely outcomes, either holding above or breaking through and bouncing below. But actually just filling and bouncing, I think, is way too obvious at this point. Way too many people are looking at it. Typically when that happens, like what we saw back here, no one's expecting such a large move. So you have the move in one day, boom, and it's over, done. And nobody was expecting that. They were probably expecting more of a gradual return to it. But that's typically when you see them being nice and clean like that, is a very volatile move, boom, and it's over. Again, because nobody was expecting such a large move in one day to take care of that. All right, let's take a look at the 4-hour chart and look at the Chinese yuan. All right, so, again, we look at the yuan because as the devaluation was going on during this trade war with China, we saw that the yuan getting devalued, which was represented by this line going up, which was then leading Bitcoin. And since June 21st, so for about over a month now, we've seen more or less a chop in that devaluation. So, it hasn't really gone anywhere. And during that time, Bitcoin shot up and then pulled back. And really has topped out. So the devaluation stopped, went sideways, dropped, now going sideways again. If the devaluation shoots up, then possibly that could help start the move higher out of this current funk that we're in with the consolidation and the lack of liquidity. But if this just continues to go sideways, expect Bitcoin to continue to go sideways. But I think this was, people can debate whether or not this was played a role into Bitcoin going higher. I think it did, because just from going back in time and looking at the big move, okay, this is the big devaluation move, and then Bitcoin's running up with it, okay? So I think that now largely the devaluation has kind of taken a break since basically mid-May and has gone sideways to down a little bit. But since mid-June, it's just been largely chopping sideways as far as that. So they haven't been actively devaluating it. But again, if this shoots higher, then I think that might be the catalyst for a move out of the consolidation that we're going into. All right, let's take a look at the halving chart. The halving chart we haven't looked at in a while, so I thought we would. But again, reiterating how these bear markets end, we come and we shoot out of the 50 EMA on the weekly. And typically when we do that in the past, right, we usually come back and test that level, that 50 EMA. We did that in this bear market. We did it out of this bear market. We came up out of it, came back, retested that 50 EMA on the weekly chart, and then moved higher, and then kind of built off of that and ultimately left it for quite a while into 2016. This move has been stronger than all of these bear market moves that exited the bear market. And so, right now the 50 EMA is currently at 7,000. So again, I think that ties into the Fib multiplier. And I think that would be the lowest of the lows as far as a pullback if this thing if all the volume and liquidity continues to kind of dry up, which it possibly could. That's how these moves kind of take a break and end. And if that's the case, then we could see price sideways to down, and this kind of catches up to price and they finally meet up. Then that buoys price. So as you exit the bear market, just keep in mind we typically have these quiet periods of consolidation for a while, but that should end going into Q4 and things should pick back up. So it's kind of more of a broader picture from higher up, looking at things from this perspective. Let's take a look at the futures expiration. All right, guys, so this is basically just a chart noting the futures expiration. So the red line is the CME. These yellow ones were the CBOE contract that is no longer active. They've stopped listing that just due to the lack of demand. So basically, the institutional investors are hedging with the CME futures contract, which is not physically settled. It's a cash settled contract. And so what we look for are pivots out of these contract expirations. Market goes up into it, rolls over after it. Market goes up into it, rolls over after it. And then the opposite will happen. If you're going down into it, market will sometimes tend to, pivot up after it. So we had largely a move down into it, and we really haven't seen this move back up. So you have a case of where we have a low liquidity, choppy environment. You have Tethers saying, well, we'll probably start a move back up higher. That would be in line with what typically happens after the futures expiration. But I do not think that we're going to see a big move. I think what's going to happen first is we're going to tap some of these highs that are being put in, these lower highs that get tapped, they'll get reject first, and then you'll have to base for a while and really start to switch the balance of equilibrium where there's just more buyer demand than seller demand. All right, the last thing I'm going to leave you guys with is a gold comparison chart. Now, we showed this in one video, and this is the problem when you have correlations, is that if you're just hanging your hat on the correlation playing out, you're going to be disappointed sooner or later. Yes, this has correlated pretty nicely where you take a quarterly chart on gold and you look at it on a weekly chart with Bitcoin. Because of the time ratios, you'll see things match up, even though you're looking at a quarterly chart versus a weekly chart. But when you adjust for the time ratio, you'll see that they match up. But over time, what's going to happen is you're just going to have a break in the correlation. So they're kind of cool when they're working. You can actually position a trade off of them and ride it till it stops working. But if you are looking at this, I think it's important to note here that we are starting to deviate from that. So this correlation might be done for the time being. It looked great, especially with the parabolic chart set up, but I think we have to be realistic now and see what, price action is changing, and we're just not following this at this point. And we get again into this consolidation period. All right, guys. Well, that's it for this video. Again, I think 4-hour swing trades, moneymaker, that's been a really good setup for smaller swing trades. I think that it's going to be a pretty choppy environment. I know a lot of guys are just kind of like holding off on the intra-day swing trades. Although, again, I think if you're more patient, the 4-hour chart is better for that. I think at this point, what we're going to see is a possible move to 8,800 and a bounce. If we want to get back into a bullish environment, I think you got to see a close above 10,300. The previous video, we said look for price to hold between 10,000 and 11,000. And if 10,000 doesn't hold, then we got more trouble to the downside. So I think now with that being the case, I think that actually opens up the 8,800 level, which would front run the CME gap and then move higher. And then what you might get is some FOMO for the guys that didn't get filled at the gap, and you might see a larger move higher back into the 10,000 range. But I don't think we're going to reclaim that. I think the bears are in control, and I think probably the best thing here is we're going to get into kind of a boring market. I hate to say it, but I think that's probably the most likely scenario going forward for the next month or so. All right, guys, well, that's it for this video. I hope it helps. Please hit like and subscribe. Appreciate all the views, and I will see you on the next video. Take care. Bye-bye.
Trade Genius.